Hello, welcome back once again. Nice to see everyone. This is Seewing Yi, and today is the December 29th, 2022. This could be my last video for the year, which is 2 days away from December 31st, 2022. And Merry Christmas and Happy Holidays, and hopefully your 2023 New Year real estate housing resolution will be a positive one because, in my opinion, there will be a lot of opportunities out there, regardless of all the doom and gloom and all the sky is falling negative headlines you've all been experiencing. So I ask all of you take a step back and just filter all those inaccurate, misleading data out there and learn, be educated, be informed, whether you are a primary home buyer or a real estate investor alike. Uh, there's a lot of opportunities, and when there's a crisis, there are opportunities. So you got to have a positive attitude and learn from the most ethical data consultants around real estate to give you some honest information and trends, as opposed to subject yourself to all those fear porn negative headlines out there, and there are plenty of them of your other YouTubers that are very, very clickbait just to entice you to subscribe to their channels so they could sell whatever product they're trying to sell you. Anyway, so I got a lot of things to cover. So the first thing I'm going to do is share my screen, and I'm going to cover a article that came out from National Association of Realtors yesterday, which is December 28th. And the title is Pending Home Sales Slid 4% in November. Oh, by the way, I have several resources I'm going to share with you today. I'm going to go over the Mortgage News Daily to go over the mortgage rates and situations. And also, I'm going to go over the Redfin year-end big picture analysis of all the trends. And also, I'm going to share with you, as always, my personal opinions about whatever I deem is I need to talk about. Once again, I've been a real estate investor for more than 30 years, and I have assisted thousands of real estate investors from all over the country to buy rental properties in many markets, many cash flow markets, many very affordable entry-level homes, and match them up with renters so investors can scale their real estate portfolio and achieve cash flow appreciation and all those wealth building attractive rates that are associated with owning real estate properties. All right, so homeowners alike, you can also see value. We see value from our my videos and and take advantage of becoming a homeowner, which is the key to the American dream. So without further ado, a lot of things to cover. Sorry it took so long to do this high-level introduction. So according to NAR, December 28th, pending home sales slid for the sixth consecutive month in November, and pending home sales recorded the second lowest monthly reading in 20 years as the interest rates, which climbed at one of the fastest paces on record this year, drastically cut into the number of contract signings to buy a home, said NAR chief economist Lawrence Yun. He further stated, falling home sales and construction have hurt broader economic activity. All right, and the pending home sales index, the PHSI, is the index that NAR uses, and their index are based on the index of 100, which is equal to the level of contract activity in 2001. So it's a 20-year tracking methodology. However, no surprise, the year-to-date November 2022, the pending home sales index with the NAR has fell 4%, to 73.9 year over year, November 2022. So yeah, and also another highlight which I like to talk about, which is to me the biggest takeaway for me on this particular article, put up by NAR, is the Lawrence Yun said, with mortgage rates falling throughout December 2022, home buying activity should inevitably rebound in the coming months and help economic growth. Now, let me, it's sort of a general broad statement. We have seen mortgage interest rate slightly decreased from the peak of this October, which is around almost 7.5% 30-year fixed rate mortgage. It has gone down to as low as 6.3% recently, a few days ago actually, but has now picked up just a little bit to the higher sixes. But I will share that with the mortgage news daily momentarily on that particular website. So what Lawrence Yun is saying that I'm taking he's implying that the mortgage rate might go even lower as we head towards the first and second quarter of 2023. In fact, I did a video with the NAR. If you search my YouTube channel, a few days ago, I did a video that Lawrence Yun and NAR, they're predicting the mortgage rate sometime 2023 to be around either from 5.5% to 6%, around that range. So they're very, very optimistic. Who knows? So based on that projection by NAR, Lawrence Yun have a very, very positive message. He said the buying activity should pick up sometime in 2023, and with the anticipation that the inflation will be subsiding and the Federal Reserve will further reduce the interest rate, especially if the recession were to occur in 2023. You would expect that the Federal Reserve will lower the interest rate to stimulate the economy back to a normal level if the recession are prevalent. We don't know. Time will tell. So with that in mind, let me get back to the article here. Let me see what else. This is sort of a short article by the NAR. And in terms of the nationwide region, the pending home sales regional breakdown, the Northeast, the PHSI, which is again pending home sales index, is slip 7.9% from last month to 63.3, which is pretty low. Northeast section of the U.S., a drop of 34.9% from year over year from November 2021. The Midwest index has decreased only 6.6% to 77.8, which is higher PHSI index than the Northeast. So the Midwest is doing pretty good. So the South index retracted 2.3 to 88.5, which is even better. The South the part of the U.S. is doing well. To me, not surprising because I'm very bullish in the southern and southeast portion of the U.S. For those of you who watched my previous video, you will know why. Because there's, partly, mainly because of the home affordability in the south and southeast, and being in the Sun Belt, very, very affordable and fast growing. That's why a lot of home buyers and a lot of real estate investors are pulling the trigger in the south and southeast, not only in the past, but moving forward into the future as well. So no surprise, the West index dropped by almost 1% in November to 55.1%, which is the lowest index comparing to the other regions of the U.S. And so the West index has PHSI index has retreated to a low of 45.7% from year over year last year. And the Midwest region, which relatively affordable home prices, not relatively affordable home prices, very affordable home prices. And I warn you, the Midwest is up and coming. right? The Midwest region of the U.S. has the lowest home price increases in the past few years, unlike the Western region and the South and Southeast. So, so it's a very healthy market. I mean, it's a boring market. It's a healthy real estate market in the Midwest region, and you might be surprised that more and more people may migrate migration back to the Midwest because of the rental prices, and home is very, very cheap, relatively speaking, compared to especially the Western region of the U.S., especially California, where I live here in San Francisco Bay Area for the past 30 years. So I know, especially what's going on in California and the Western region with the largest decline in activities, needless to say. And all right, so with that in mind, biggest takeaway again, NAR, National Association of Realtors, Ms. Lawrence Yun, feel very positive relative to the future of the housing market for the foreseeable future. So, which is a good sign, right? It's not all doom and gloom. It's like some experts predict. So it's for sure it's not going to be a crash. The interest rate right now has creeped up to around 6.55%, slightly higher than the previous last few days. 29 December, the 30-year fixed rate is 6.55%, which is 1 basis point higher than the past few days. And also, I'm going to share with you the historical 30-year fixed rate mortgage. I know a lot of people are just freaked out about this this year's interest rate. But if you, on historical basis, I mean, you look at 40 years ago, back in 1980 something, the mortgage fixed rate was around almost 18%. And then only like in the past 20 years, around here, the mark was you see interest rate within 6% or less. So the last 20 years, we are enjoying some amazing, very, very low interest rate, mortgage rate, and people are spoiled by it. But prior to 2020, prior to 2000, 20 years ago, look at that, 18% mortgage rate back in the early 90s. Then the mid 80s, we have like 10%, 11%. All right, then the 1990s, 8.5%. Then you have even the late 1990s is at 8%. So only the year 2000 when the interest rate has gradually decreased drastically. So just so you know, I mean, don't get spoiled by it. So I think the new normal is set that in the next few years at least, no one can predict the future, but I have to believe that you should settle in between 5.5% to 6% mortgage interest rate for the next few years. So that's the expectation for you guys out there, whether you're a home buyer or a real estate investor. So welcome to the new normal, right? So that's how the world works in these days. Okay, now I finally found what I wanted to show you. Let's get back to Redfin. Okay, I mean, I've been using Redfin for quite a while, the last few years to cover a lot of different articles and trends. So today I'm going to go over the big picture. I'm going to go over the nationwide housing market and how Redfin has provided the data, and the year end is December 25th. Okay, so this is my last review of the Redfin housing data year to date, December 25th, 2022. So, and it'll kind of coincide with the NAR analysis that pending sales has been steadily dropping throughout this year, 2020. And so, in fact, let's go over the new listings. I know seasonality is also plays a part. The last quarter of every year, we see housing activities always has pulled back because of the holidays, Most people are not motivated to get into any kind of real estate transaction. That explains the slowdown on in the fourth quarter of every year. But with that said, you look at the trend year over year. This past year, or the black line is 2022. The new listing, look at the peak of the new listings was back in June of this year, 2022, and then the new listing has steadily declined, week over week, month over month this year, all the way down to where there are only around 45,000 new listings nationwide, which is 21% drop from the previous year. So it's pretty significant. So that tells me that people are not selling their homes. The builders are not building enough. I'll cover that momentarily on another slideshow. So just because pending sales has been dropping month over month for the past 6 or 9 months, it does not mean we are in the housing market is in a very, very bad situation. Not really, and I'll tell you why. So oftentimes, here's another problem that I hear. When people see the negative headline, home sales has dropped, significantly, month over month, ever since the interest rate has risen. Home sales dropping does not mean home prices dropping. There's really no correlation. Oftentimes, is an inverse relationship. So, you have to understand the wording. You have to understand the sources of the information and how they report it, how the YouTubers out there and the mass media, when they provide videos about the housing market, especially this past year, house sales decreasing does not mean home prices are decreasing. So you really need to take it into perspective. All right. So with that said, there's a silver lining. What are the consequences of steady home sales decreases? And I will share that with you momentarily as we go through this the remainder of my presentation. So let's get back. Let's get back to the Redfin analysis. So new listing is dropping quite significantly. This is this eye opener, and also let me go over medium sales price. Okay, medium sales price nationwide. I mean, the Western region, yes, we have seen home price drops. Yes, real drops, 10 to 13%, especially in the Northern California, where I live, San Francisco Bay Area, and Southern California as well. Because it's you have to realize the California housing market always has been a cyclical market, go up and down, and so forth. But the other markets in the U.S. are doing well, believe it or not, in the Midwest and Southeast. But I'll show that to you momentarily. So yeah, there's like 10 to 13% drop at the median price peak this year nationwide. Was around back in June at 390,000 median price. Now, now we are forward 6 months later toward December. So really, if you think about it, all the gains that occur from 2021 to 2022, you see the gain like 13% year over year appreciation between 2021 to 2022, 30% in the mid-year. Yes, drastically disappear back to whereby you can make the argument of no appreciation, at least nationwide, year over year from 2021 to 2022, because of this, steadily house price drop. We are experiencing a market correction as a result of the skyrocketing of the interest rate from 3.5% in the first quarter of 22 to as high as 7.5% back in October, now back down to 6.5% for most people. But the silver lining is, look, a lot of people don't talk about it because I always take a positive long-term approach. I mean, you look at the home buyers and real estate investors that purchased their houses back in 2019. I think 2019, the median price of a home, as you can see, 276,000. And then you fast forward 3 years later from 276K to a whopping 389K. We're talking what? We're talking 30, 40, 50% appreciation in some markets, some less. Oh yes, I know some. The price chart has, almost double digit in not nationwide, but the western region, California, Arizona, Nevada, perhaps Austin and Boise, Idaho. Yes, those pandemic boom and bust market has seen a very significant drop in home prices, 10 to 13% year to date. But the other markets in Midwest and South and Southeast is doing very well. Either they are stay level in terms of home appreciation in the past 12 months, or even have achieved positive appreciation in many markets in the Midwest and in the South and Southeast. Right. So let me go over another Redfin, another scenario, pending sales. Okay. Pending sales, as I mentioned on the article I just shared with you with the NAR, they're showing at least 6 to 9% of pending sales nationwide from their data. And the Redfin also showing somewhat, similar, right? Because at the peak of the sales, pending sales category back in May of 2022, we have like 76,000 pending sales. And now, fast forward to December 25th, we have only 35,000 pending sales, which is a 37% reduction year over year from 2021. So, yep, pending sales is down, and home sold is down because, again, the current homeowners they are sitting pretty, they're not selling their homes, and builders are pausing construction for various reasons. I will go over that. So let me see what else I want to highlight for you that are very, very significant. So I'm going to talk about over here in the final data. I'm going to talk about on the Redfin. Hopefully it's final. Month of supply, right? 6 months is a balanced, healthy market where you have equal amount of seller and equal amount of buyers. Now, for the past 2 years, we have very, very low supply of inventory, especially at the beginning of this year. At the beginning of this year, back in March, we have 7.6 weeks of supply, not even 2 months supply of inventory. 6 months is a balanced, healthy market. So it's very much a seller's market at the beginning of the year and even the past few years during the pandemic, as you can see, right? Very, very low supply of inventory with the high demand due to the record low interest rate of the last few years. That's why we have seen skyrocketing of home prices. But then because of the demand has subsided due to the higher interest rate, we have less buyers in the market for the past 6 months. So as a result, the inventory have risen. You might have heard that there are more inventory. They are coming back to a somewhat of a buyer's market. And whereas buyers these days, for those people that can afford it, they are in a position to negotiate and they can get a good price. They can negotiate for the interest rate, many good loan options, and so less competition. So for those people that want to buy, and who's to say they should not buy as long as they can afford it, as long as that they have a long-term buy and hold strategy, 7 to 10 years and beyond, they should be fine. But having said that, per December 25th of this 2022, the weekest supply nationwide per Redfin is 13.4 weeks. So you divide it by 4 weeks per month. You divide 4 weeks, divide into 13. So we only had still 3.4 months supply of inventory nationwide. So think about it. 6 months supply inventory is a balanced market. The seller doesn't have an upper hand and the buyer does not have an upper hand. So clearly, the Redfin report a 3.4% supply of inventory nationwide. I know each market is a little bit different, local market, as I always say that. 3.4% is still a very much a seller's market. That tells me because of pending sales has been decreasing drastically month over month this year, not enough buying demand and sellers are not selling. There are very few housing sales. So as a result, the supply is going to get worse as we move forward, especially if the mortgage interest rates stay at an elevated level, 6% or what have you. So, so yeah, still, to me, again, my takeaway is uh, demand is still greater than supply because the supply is 3.4% of inventory. So it's a concerning. So all right, so that's the end of my Redfin analysis. Now I'm going to do my final analysis, and this is a slideshow which I created just recently just for this purpose. So you know what I see? I see here are the consequences of pending sales. There's not enough homes to buy for the entirety of this year. Home affordability, a lot of people cannot afford it. A lot of people stay on the sideline. And of course, existing homeowners, they are not selling, they're sitting on their mortgages. Builders are pausing their home construction as a result of lack of demand. All those reasons. Look at this. Look, take a look at it. This is pretty head scratcher, right? The monthly supply for the entire 2021 is around 2 months of supply, and with the low mortgage rate, historic low of 3%, 3.5%, we have seen skyrocketing home prices in 2021, which is well, I believe will never happen again in 1,000 years ever again with the low interest rate and the multiple offers, bidding war, quadruple digit appreciation in just a mere 18 months between late 2020 to the entire 2021 and the first quarter of 2022. We have seen some historic, once in a generation, once in a lifetime, rising appreciation rates across all over the US. But at that time, the monthly supply was around 2 months last year, 2021, 2022, started out with a very low inventory level. And then when the interest rates rocketed back in April and May, we have steadily seen lower demand, buyers not buying, they can't afford it, or they are scared, whatever. And then we are reaching at a level right now, still, even with inventory have risen more than before recently, we're still at a low of, low 3 months, 3.2, 3.4 months level of inventory. So this is very concerning. So it's going to be, it's going to create a lot of bad situation. And then, of course, like I said, the U.S. building permits has collapsed. The builder sentiment has collapsed because demand has subsided. So the builders, they build their new homes based on consumer demand, and the consumer demand has decreased drastically. So they are pausing getting permits and what have you. And building permits collapsing, we have a repercussion. We have a ripple effect for the next few years. And because the consumers are relying on new construction to a supply of inventory to come into the market, it's just not enough, next few years and even beyond. The repercussion is long term, based on the U.S. Builders permits collapsing, and they're not building enough homes, et cetera, et cetera. So builder sentiment, housing starts is declining, which is going to exacerbate the low supply of inventory. That's what I'm trying to say. Inventory has finally peaked for the year. Look at this Alto's research. They have shown that we need single family homes wise. We need like 1.2 million single family homes back in 2015, and then gradually there has been very low supply of single family home construction from 2015 to all the way from 2021, when there's an extremely 1 month supply of inventory. That's why we've seen some once in a lifetime historical price appreciation back in 2021. Now, even though the inventory has increased, quite substantially the past 6 months, we're still at a very, very low inventory level. We are like more than 100% low inventory. It'll take a while to catch up, for the reason I just stated. So inventory has peaked, and there's concern supply is very, very limited. very low new supply as concluded by Alto's research. And you see the trend, right? You see the 2022 trend, which is not looking good. Low supply, high demand, economics 101. When demand is higher than supply, housing prices will increase. So economics 101. So hopefully you learned something. All right. Again, October 2022 marks 13 consecutive months of lowering existing homes. We're not talking about builders. We're talking about homeowners that are selling their home, the resale homes, right? It has been the red graphic signified this year, 2022. You see, ever since from beginning of 2022, you see the resale homes has been decreasing because home sellers are not selling because of it's not a good time for them to sell. So we don't have that much inventory right from the get-go. And further decline are expected in many, but not all markets. There's no such thing as a national real estate market. Real estate market is very hyper local, down to the neighborhood, down to the block, down to the APN lot number. So yes, I mean all the negative headlines. They bombard the news media with sky is falling. We're gonna have a crash, whatever. Not happening. If you look at the color coding. The red color shows home price decline around 5%, maybe more, depending on area. And a blue graph indicates that the home prices has been increasing as we speak from September 22 to September 2020 year projection. No surprise, a lot of you guys knows about it. California has seen the largest decline of home prices, and pockets of Texas, perhaps Austin, and Midwest here, Chicago metro area, the region have seen home price declines, and North Dakota, who cares about that? Place and Minnesota declined, and pockets of the West has declined, and also Northeast has declined, quite substantially. The New York City area, Connecticut, New Jersey, up and down the Eastern Seaboard have seen a 5% home price decline year over year from 2022 at the projection. But the areas that are still increasing in value, albeit very little, are pockets of the West, I don't know where is this place here, Utah, Idaho, Pacific Northwest, Washington State, on the eastern portion of it. I don't know where is this place, Montana. I don't know. I don't care. Around here, in Arizona, and what's up top here? Above Arizona is Colorado, perhaps. Then Nevada around here, and then the biggest growth is the affordable Sunbelt markets, which is in the south and southeast. We're talking North and South Carolina, Georgia, Florida, especially Texas. Many areas of Texas are doing well. San Antonio, Houston, even Dallas are doing very well. Austin, yeah, we're going through a little bit of a correction. Oh, well, more than a little bit of a correction. But south and southeast, home prices are very, very affordable. And that's where the growth component, if you look at the nationwide. So it's not all doom and gloom. Some markets are still appreciating little by little, not that much. All right. So, and this graph, if nothing else you learn, this graph will show you why there would not be a real estate crash. Because look at this. Do you know 40% of the US homeowners, they are free and clear. They don't have a mortgage. They have massive amount of equity. And the people that have mortgage, 65% of the homeowners that have a mortgage, their mortgage is at a 4% 30-year fixed rate mortgage low or lower. In fact, let's break it down. Oops. Let's break it down. Let's go from here. Okay. Oh my God, what am I doing? Almost 10 million people with mortgages have a rate of less than 4%. 11 million Americans with mortgages at 3.5% or lower. What else? What's over here? 13 million people have a mortgage rate, 30-year fixed rate mortgage of 3% or lower. 4.5 million people have a 30-year fixed rate mortgage of 2.5% lower. And I don't know who are those people. I'm not one of them. They have a 285,000 Americans with mortgages have a 30-year fixed rate mortgage at below 2%. Look, I have a high FICO score, but I don't know what I can do that. So really, if you think about it, this is mind-boggling. Look at this. It just goes to show you the American dream is all about home ownership. U.S. homeowner equity surges to over $29 trillion as the value of the housing stock passed $41 trillion. So most people's wealth are in their homes. So for people that, continue to stay in the sideline for whatever reason, especially people that can afford to buy a home, they need to buy a house to live, or they need to buy homes for investment purposes as well. So on historical basis, it pays to own a house, especially own it long term. Okay, the people that bought houses recently, I have an absolutely amazing amount of equity in their homes, and that's all I'm going to talk about. So those people historical mortgages, they're not going to sell their home to move up to buy a new home and having to pay 6.5% interest rate on their mortgages, which will increase the mortgage payment by 100% and having to pay a higher price. So a lot of people that own a home right now, they are hoarding their historically low mortgages. They're not going to get rid of it. They're gonna sit out for the next remaining 28 years, especially when they refinanced 2 years ago at the low rate. So they have homeowners right now have very little incentive to sell. The only people that are selling are the people that have to sell. Maybe they're under distress. I don't know. So if you do not sell your home right now, you're okay. If you sit on your home, you sit on your low rate mortgages forever, you're going to be fine, because over time your house can appreciate and you're going to be fine. So all this reduction of home prices, yeah, if you're selling for whatever reason, it's the wrong time to sell, well, you could be subject to the market situation. You might have to lower your price and all that stuff. So you do not have to sell, sit on your mortgage, sit on your house for a long time to come, and you'll be fine. So I'm sorry, I have so much to talk about and so much to cover. So my takeaway is this: there are some positive signs going on in 2023 and beyond. The mortgage rate should not get any higher than it is right now, at least based on my projection. We're coming back to a balanced market. We've just gone through a very, very challenging correction, especially in 2022. So the homeowner dream, American dream, is still alive and well. For primary homeowners, if you can afford it, you should buy a home. If you can afford it, you want to stay in your home for the long term. And real estate investors, if you want to become a real estate investor, then you could do that if you have the finances. So anyway, that's all I have to say. And you see a lot of value in this video, please smash the like button and subscribe to my YouTube channel. I need more subscribers out there. And also, if you want to take your finances to the next level, regardless of where you live in the country, subscribe to my website below. Input your email into our newsletter database so you can be a part of our real estate investing community. So every week you will receive real estate investment news, information, and opportunities free. You'll become a free member of our real estate network, the Year Real Estate Network. Thank you so much, and happy holiday, and hope the best for you. And I will see you on the next video very shortly. Coming up in the next few days, most likely the beginning of 2023. Have a nice holiday. Wish all everyone well, and thank you for sticking with me on my YouTube channel. And thank you so much. This is Seewing Yi. Have a nice day. Happy New Year. Bye bye.